I forgot to
That's
remind.
all. All right, everybody recorded.
Yo,
All right.
gang.
What's up?
That's good.
Who
Boys.
that?
All right.
Who was that?
I don't even know who that was.
It was Nate.
Oh, okay. So
what's up, Nate?
The biggest things is, your discipline and risk taking are two of the most critical aspects of trading psychology. Everything we do, anything you're going to do in the market, you're the one doing it, and your mind has to be able to handle it. So, your fear and greed are one of the most commonly associated, things with your trading psychology. So, things like hope and regret, they also play a factor, but this is the biggest thing with us all. We have to get to a stage where we're not showing an emotion to our trades. You have to trust your psychology. You need to trust your analysis. So some of the biggest things is, trading psychology is the emotional component of an investor decision-making process. It's going to help explain why some of your decisions are made rationally and irrationally. A lot of that comes later on. We'll go over all that stuff. Trading psychology is characterized primarily as the influence of both greed and fear, which we know that, if you're coming into this game and you're talking all about money, it's all about money, guaranteed you're going to be part of that 95%, you're going to fail. Take the money out of the equation. Greed drives decisions that appear to be too risky. Oh man, you know what? I lost 1%. I'm going to risk 2% on this one so I can get that back. Ain't worth it. The market's always going to win on that one. Fear drives decisions that appear to avoid risk and generate little return. Oh, you know what? I'm only going to risk 0.1 lot because I just lost 1% and I can't lose again and stuff like that. And then behavioral finance has documented several psychological biases and errors involved in making trading and investment decisions. And we'll go over what some of those behavioral finance aspects are. So understanding it, trading psychology can be associated with a few emotions, behaviors, and stuff like that for the catalyst of our market trading. Some of them are emotionally driven, and they do surround greed and fear. I'm not going to go into what greed and fear are. Obviously, we all know, that greed is the thought of excessive desire for wealth, and then fear obviously is the emotional state of, losing and all this other stuff that we get as far as the market. So greed, it's going to inspire investors to stay in a profitable trade. Greed inspires investors to stay in profitable trades longer than it's advisable to squeeze out every last penny. So what does that mean? So you're in a play, you see that it's, going against you, but you just say, no, it's going to come back up. It's going to come back up. It's going to come back up. We always hold on to the losers longer. It's one of the biggest things that you have to learn how to not do. That's where having proper risk management and everything like that is key. So if you're going into a trade and you have to make a point where in your trading plan and in your psychology, you say, okay, at this point, I'm going to go break even and I'm going to take partials. Once you start doing that, and once you start learning how to do that, it makes a big difference in your psychology in a trade, because then you no longer care. If you're break even and you've made profit and there's no more risk on the table, then it doesn't matter if you hold, because what's the worst that's going to happen? You're going to break even, but you've already made profit. Whereas the other end, you don't put a stop loss, you don't put take profits, you're not breaking even, you're just kind of letting Jesus take the wheel on your trade. That's where your psychology is going to take a big hit, and that's where your losses are going to take a big hit. So that's a big thing that I know Mel and Alex and Cam and Vine, they all harp on it. Make sure you guys are putting stop losses, make sure you're doing proper risk. These are the moments we go break even, this is that. So listen to that and really, try to channel that. Even if you just start practicing it on a small scale, start practicing it and start adding that to your trade, because that will physically, not only physically, but it'll mentally help you in being able to hold on to a trade longer, not being afraid of, oh my God, it's going to move against me. That's why, earlier and, yesterday I was giving Vine, I was trash talking Vine, basically saying, yo, you didn't go break even? Why didn't you go break even? And he said, no, I guess, I didn't like it. I wanted to get out. Vine's been doing this for a long, he knows his trade, he knows his psychology, he knows what he needs to do. But that's me just giving him crap because I'm learning how to do that break even and all that other stuff. So it gives me a chance to do it. But okay, so going back, behavioral finance, typically encompasses the concept of mental counting. So mental counting refers to the propensity for people to allocate money for specific purposes. That's our day-to-day thing. We mentally allocate money all day long. Okay, I'm going to need to spend money on this. I'm going to need to spend money on that. I'm going to need to do this and do that. You're mentally accounting for your money and what your money needs to do, right? The herd behavior. That states that people tend to mimic the financial behaviors of the majority of the herd. So, big Tesla boom. Everybody was buying a Tesla. Everybody bought Teslas. Herd mentality. Everybody's buying GU. They go and buy GU. There's stuff like that. So that's the herding mentality. So herding is notorious in the stock market, and that's why a lot of people do signal sales and everything like that, because they know they can make money off of people following what they are, especially people new to the game and new to the market, right? The emotional gap. This refers to the decision-making based on extreme emotions and emotional strains, such as anxiety, fear, and excitement, stuff like that. When you come to the charts, you need to come to the charts with a clear head and not having that anxiety, that fear, that emotion. If you're having a crappy day, you got into a fight with your loved one, your dog crapped on the floor and ruined your carpet or whatever, it doesn't matter. You need to, if you are not prepared mentally to come into the market, just take that step back and don't trade. Stay cash for the day. Don't worry about the market moving up and down, everything like that. Just stay cash. You're gonna thank yourself the fact that you didn't just go blowing 1%, 2%, getting into a revenge trade, blowing 4%, and now you've blown an entire account because it all stemmed from you showing up and not being mentally ready to go. That's one of the biggest things. That's why I put out that post in the psychology section that if you guys are having a bad time or you need somebody to talk to or anything like that, please, by all means, feel free to reach out. Especially through Discord, I will do whatever I can, any moments I can to really reach back out to you and just kind of talk it over. But one of the big things I ask all of you guys to do is if you're having a shitty day, you're having a bad moment, something's happened in your life, just take a step back. Do not trade. Please just stay out of the market. Just let it be. Congratulate everybody, paper trade, do something, but clear your mind and then come back the next day ready to go. It's not worth going into the market with not a clear head. Trust me. It's the key reason why people make irrational decisions. Trust me. Anchoring. Anchoring refers to attaching a spending level to a certain reference and stuff like that. So you're spending consistently based on a budget level, rational spending based on different situation utilities. So anchoring is simply stating, you're anchoring your finances to certain spots and certain, things like, I have a certain amount of money here. I have a certain amount of money there. I need to spend a certain amount of money on this. That's kind of anchoring. So, you need to go and spend this money. That's the money you've anchored down for that. And that's kind of like the key thing where people are saying, like, if you're going to get into the market with live funds, make sure it's money that you can lose because you're going to anchor that money to that. And that's where it's going to come a point where if you lose all that money, you're going to try to pull money from somewhere else. And your mind is not going to want that. Your mind is going to try to fight you on it, but emotionally, you need to get back in the market, or you feel you need to get back in the market. And then, self-attribution, it's the tendency to make choices based on overconfidence in one's own knowledge and skill. It usually stems from erratic knack in a particular area. So basically that whole jack of all trades, master of none type of situation. Be confident in your trading plan. Get the data, get the information you need by back testing, by forward testing, by paper trading, by everything like that. Build your confidence that way through knowledge. Build it through a sustained data string that shows that this is a working strategy. This is a working plan. I feel confident and comfortable that if I lose a trade, it's because the market didn't cooperate with my plan, but I know my plan works. That's not being overconfident. Like, yeah, I watched a Phantom video yesterday. I'm going to trade the shit out of this market today and nobody's going to be able to stop me. The market's going to win. The market's going to win because that's just how it works. The market's going to humble you no matter what. And yeah. If y'all don't know that yet, trust me, there's plenty of us that have, blown funded accounts that have lost money.
16
maybe. 13.
Yeah.
And it's not that they're bad traders. It's not that they don't know what they're doing. It's the psychological side of it, of the self-attribution of, I know I can do this, I'm better than this, I can got this, I'm gonna keep going, I'm gonna keep going, I'm gonna keep going. And then all of a sudden, you blow an account. And that's another thing. If you're stepping into the charts and you're confident because of your knowledge of what you've learned with your data and everything like that, that's a different ball game. Where I'm gonna pick on Vine here for a moment. If I was to give money to anybody in our community to say, hey, trade this money for me, and feel confident that they can do it, it's going to be Vine. But I know my man has blown accounts. So it's my job to protect my money and make him psychologically better. So that way my money can go further. Right. And that's where I'm going to come into this community and do my best to try to help everybody, because where your skill in trading stops, your psychology has to begin.
Mm-hmm.
And if it doesn't, and there's that emotional gap in your trading and in your life and what's going on around you, you're going to lose, because there's only so much that your skill can take you if you're not making proper decisions. And that's where we come into the loss aversion. It's a psychological error that investors place, and it's greater weighing on the concern of losses than the pleasure of market gains. So basically, this whole thing is talking about holding on to losers longer than you hold on to winners. We will always do it. You will always hope. It's always that hope aspect. And one of the biggest things you need to do is, when you set a stop loss, you leave that stop loss alone, unless you're going to go break even. Never make your stop loss bigger. You only want to make it smaller. And that will help with a lot of this of holding on to a losing trade, because if you don't have a stop loss, you're asking for nothing but to have your account completely wiped out. If you set a stop loss at 0.5% or 1%, or if you're getting ballsy and you set it for 4%, be willing to eat that loss if it happens. But understand that the market is going to give you is going to give you signs that, hey, you're not right, you're wrong, you should probably get out of me right now before I'm going to take all of your money. And that's where Vine and Mel and Cam and Alex, those guys are going to come in and teach you how to understand the market and read it and understand that the market is telling you need to back out, you need to get out. And I'm going to come in behind that, and I'm going to teach you how to keep your mind right and get your stuff, get everything ready and have you confident. So that way, when you enter a trade, you're not going in with overconfidence. You're going in with the confidence that you've set up a trading plan, you've set up a strategy, you've tested this strategy, it works. If the market doesn't go in your way because the market just decides it doesn't want to go that way, well, then you bite that loss, you analyze that loss, and you kick its ass the next time. The next thing that I want to show you guys is this.
That's preaching, man. You're preaching right now.
All right. So, short-term focus versus long-term investing. So this is a really cool little kind of chart, and this is about 99% of us in this community, right? So we start off, right? We were talking about it today, especially over AU. If anybody missed that conversation, go into AU and you can read the long conversations of which way that market was going to go. And 90% of it, we were all wrong, but it's great. It's fine, right? So stage one, the price is going to go up. Let's watch the market. Then we move into 2. The trend is holding. I'm going to buy on the next pullback or consolidation. Woo! Good thing I didn't wait and I got in the market, right? Now, what's the market doing? It's starting to pull back, right? Oh, here we go. I'm going to use this to increase my position. So most of the time, what do? We see the market pull back, comes into our zone. Up, that's it. We can scale in. We're going to scale in. We're going to get, we're going to hit another one. And bam, the market keeps going south. And then it keeps going south. And then it keeps on going until you get to a point where you've sold everything. You're out of the market. Well, every time you're going to feel this, you're going to have this feeling, the market's going to then change directions. And then it's going to go back up. You know, this is that typical chart that you see of the levels of a trader, where you're coming into that winning success here. Yep, you get that lull where you get that depression, everything like that, and then you come back up where you start to realize what you're doing. You've gotten your psychology right, you've gotten your plan right, and now you've gone on your way, and you see a change in your trading. But this is where we're all going to go, 100% psychologically, skill wise. It's going to happen. It happens to myself. I know it happens to Vine. I know it happens to Mel. Cam, even though he's a fucking sniper and pulls trades out of his ass every now and then, it happens to him too. We all lose. Everyone's going to lose. You know, you're not going to win 100% of the time. And that's a big thing you need to understand when it comes to trading, and get it out of your head of, I'm not going to lose. Guess what?
Yep.
You're going to lose, but you need to win more than you're losing, and only by a little amount. I can show you many statistics on guys that have 20% win rates, but completely destroy the market in the way they hold, because their risk to reward is astronomical. Or you have, other guys that are 50% profitable, it all stems from understanding your risk to reward and making sure that you set yourself up in the best way to succeed. Oh, just drop shit off my desk. So I'm going to unmute everybody. I think I can unmute everybody.
Yeah.
Let's see. I don't actually. You guys can all unmute yourselves.
Make it happen.
All right. So I see there is something in the chat. Any questions, drop them here. Yeah. Does anybody have any questions? Feel free to unmute yourself. Feel free.
Yeah. Any questions or inputs, anything that you see? This is that emotional confession in real life instead of in the chat. I'll just kind of start it where, like I said, Mac was preaching was, he said your skill set only gets you so far, right? And that's like in anything. Like I realized that when I played basketball and I was like playing at a really high level, but when you get to college, everybody is good, right? Like when you get to play at a D1, D2, even a D3 level, everybody is at the same level as you. You got some dominant players, but it's that kind of like, okay, now how can you win a game, right? So you think of people like Kobe, MJ, their mental game, the way they approached the game, the way they thought about certain stuff was a little bit different than most people, like 99% of players, right? So it's the same thing with trading. Is like, for me, like this past month has been one of my worst trading months since I've like really locked in trading, which has been a year. Well, it's been like 6 to 7 months that I've really like locked in. But I've been trading since October. I was taking signals up into December, and then January, February, I kind of like kicked it off, and then May is when I found Phantom. So really since May till now, it's like, okay, everything has been put together, complete. But this month has taught me like, hey, like, bro, you're not mentally stable at all. And it's because of a lot of like personal stuff in life, but it goes to show is like my skill set wasn't better than my mental, I mean, it's my skill set is better than my mental, and it has to be the other way around. Realizing that I put a lot of time into just understanding and learning my strategy. And like he said, it's people with 20% win rate. So one of my questions to you guys, or one thing I want to say to you guys is like, understand what strategy you are trading. Like, we don't trade retail. A lot of people like to throw that shit around like, oh, I'm smart money. But smart money traders, most people will tell you like, yo, like I'm 30% win rate, 25% win rate. I know Roberto from Phantom. I think he's 22 or 25%
23. He just updated.
Yeah, and he's I'm pretty sure he's making like 20 to 30 hour a month, So these kind of things you got to understand is like, even with these, he 80% of the time he losing. You know what I mean? Like he might lose 5 times in a row, but that's what our strategy is. And everybody like, oh, I just hit a 1 to 15, but it's like, well, how did you take those other 4 losses? Were they 2%, 3%, 0.5%? Or did you just take them because that's what you know? So for me, I'm in that he said, damn, definitely from Brooklyn. So yeah, I'm like that. I would honestly, I gotta really update it. I'm really getting more into it, but for the past month, right? I've been 30% win rate. When the rest of the year I was around 50, 60. But that goes, see, now I'm inconsistent, right? Like it's a big difference and a big jump, and it shows how much your psychology can weigh you down, right? So if you can't take those losses, you won't be profitable. And that goes into understanding your strategy and your edge. That's the first part of that psychology. So that's why you learn the technicals, because you have to have some type of true analysis behind the market, right? And then that second part, which is the real part that gets everybody, 95% of those traders, is the emotional part, where I lack, and I always know I lack emotional intelligence, just the way I was brought up. And I have to be able to, I can't blame it on that kind of stuff. I have to be able to like figure it out for myself and kind of push forward with that. But if you guys go through like, I know it's stuff that you guys go through, you might be like, damn, I was wrong. You can't say you was wrong. You can't say you was wrong, because the market does what it wants. We're never right. You know what I mean? It's not like when we trade based off of edge, right? So when the price does go our way, it's not that we were right. It's just we traded our edge and the market was going that way also. It was in agreement. And then when it comes the opposite way, it goes against us. The market is not in agreement. And you have to, if you look at the top of my chart, when I show you guys all the concepts, it'll say losing is necessary and normal, because I had to, being 4-star athlete, growing up, to win, like I'm being honest, like it is hard to lose for me. Like I hate it. You know what I mean? It bothers me to the core, and I realize that is my biggest downfall. So for the past 2 weeks, I'm like, when you take a loss, it's like figure out how to make that loss and turn that loss into a positive. And you're not being delusional. It's not like, oh, that was a great loss. No, it's like, no, be like, at least I traded my setup. Like I took a loss, but it was like a spread loss. Like price didn't even hit my stop loss on the charts, but spread took me out. And I was like, that was a beautiful execution. Like it was just, can't trip on that one, Vine. It was 1 to 8, but you can't trip on that. And that's how you gotta use, like, you traded your edge. Like you can't be mad. Even today, right? Had a beautiful trade that could have went 1 to 12. Got all that 1 to 4 because I didn't like the way the 15-minute look. And I was like, at least you were comfortable and you stood your ground. If I got out that trade, like Mac was like, hey, Vaughn, like he said, he got on me. And because a part of that is like psychological, right? Because there's a reason I took the trade. But then I went to the 15 and I've somehow found a reason why I didn't like it. But it could have been something deeper where it's like, nah, I just wasn't confident in that trade, right? So these are the things you have. Now for me, I'm like, yeah, well, I didn't like it. But also it's like something is a little bit deeper. And that's where we have to really be realistic with ourselves and honest with ourselves. It's like, even if we don't know what it is, it's like, hey, maybe it was another reason why I got out that trade, right? And next time you gotta, journal this and write down what you did and why you did it, and understand that as a part of the game, and then continue to move forward. You know what I mean? So that was an excellent presentation.
Yeah.
Excellent.
Thanks, man.
Yeah.
Excellent.
And I wanted to, if I can, put a piece in. I've been reading this book and taking notes on it. This guy named Tom Hougaard, and he's like this. He's a trader from the Netherlands, or what is it? He's Danish. I don't know what country it is, but he's Danish, and he's like real cold with psychology. And it's this book he wrote called The Best Loser Wins. And I wanted to read this passage, if I may.
Yes, sir.
It said, so here, this passage is the chapter is called The Key. And it's just like a small summary that I always that I had took notes on. But he said, so here it is. What follows is the key to unlock the door to your success, the key to breaking down the barrier between the life you want and the life that you are leading now. If you want to succeed in an endeavor where 95% of people are failing, you have two choices. You can study the large 95% losing group and do the opposite of what they do, or you can replicate what the 5% do. If you are not as successful as you want to be, at some point, sooner or later, you need to change your behavior. It doesn't matter if you've been trading unsuccessfully for 3 months or 30 years, you are much closer to success than you realize. The 95% fail because they interpret the pain messages received automatically from our hardwired reptile brain without any modification. You need to learn to recode your brain's messages when pain comes knocking. Instead of reacting and running away, a small group of consistent traders, the 5%, hold fast and run towards the danger, not away from it. The 5% succeed because they have learned to flip the switch. Flip the switch. This will feel very uncomfortable, but it is a discomfort you must accept and embrace if you want to succeed in the game of financial speculation. It is the reason why trading looks simple, but it is not easy. The paradox of trading is this: by doing what the 95% cannot do, you will become successful. And that's like a piece that always resonated with me. And that was a great presentation, by the way, too. That was a great presentation, Alpha. It was amazing. It was really good. I actually took notes, actually. Like, and it's just because there's always some shit that you can learn from somebody and stuff. Like he said, like, you know, I know a lot of the book is called The Best Loser Wins. His name is Tom Hugard. And like one of his biggest things, like one of his best quotes to me that resonated with me, Nick, was and it's my little bio on Discord. It's what's it called? Flipping a coin and applying risk management. It's literally that simple. It's like you flipping a coin. It's like, my model. I got my model. Yes, it's showing. But at the same time, the market could do whatever it wants to do. But as long as you apply that risk management, it's just like shit. Okay, I'm flipping my coin. I got my confluences that make me think the price is going to do this. But nonetheless, I'm going to apply risk management because, I mean, a lot of y'all, some of y'all, maybe know how I was before. But prior to, me getting more disciplined and more professional about trading, bro, I'm telling you, I was wild. Okay. I got that first
25K accounts to $1 million on a demo.
Bro, I literally, I
Yeah, just
like,
going nuts.
Obviously, like, I was over leveraging like a motherfucker. I was really all over the place. But I flipped that jump from 25,000 to $1 million. And I was just like, yo, trading is the easiest thing. I can do this. This ain't nothing to me. Man, yeah, man, I'm finna go and so such. I'm sitting up getting happy over a fucking demo account. Like I ain't made not $1. You feel what I'm saying? And I took my first because I've been studying since studying since like December of last year. And and then I just recently really I would say I didn't get serious about trading until I started learning ICT, the inner circle traders like theory, and that was back in August. Because like he's opened my brain completely to what the banks are doing in the markets, But like, I took my first funded account back in July, and like I took it July 5th, and I failed it the exact same day. You feel what I'm saying? Because like I took that first trade, and it's just like psychology started, picking in. So I'm not going to take like no long thing, but I just want to just put in just like Alpha was saying, like I can know what the banks is doing and doing this and doing this. Alpha can know this. Vaughn can know this. Nate can know this, and Victor can know this. But it's like at the end of the day, it's like until you start, like, what are you doing? What are you doing outside of? What are you doing in your life that has nothing to do with charts to improve your discipline? And that, like, I ain't trying to take, be talking for forever, but like me personally, like I make it apparent to myself, okay, I have to go to the gym 4 days a week, right? And I specifically want to go to the gym on the days I don't feel like going to the gym, because I correlate me not wanting to go to the gym and still going to the gym. I correlate that with with me wanting to enter into another trade, but not entering into that trade, right? Or like me, I fast, not like that no more, but I still like, I was fasting for a long time. And like, I would correlate like, okay, I really want to eat, at 7 o'clock. I really want to eat right now. But like, I correlated not eating with, okay, even though I really want to eat, I'm not going to eat. I correlated that with, okay, I just added 1% to my account. Okay, I want to take another trade, or better yet, I just lost this trade, and okay, I need to make another trade. Let me get into it. But like, because I'm disciplined in those other areas, it's like, okay, it kind of helps me to not be, to be more disciplined, while I'm trading, if that makes sense, and so like that's my biggest thing where I'm at right now is like my psychology is just has improved tenfold just because of, and then another thing that I did, like, and this is the last thing I'll say, because y'all know me, sometimes when I get going, I'll be going. But this is the last thing I'll say is like, for me personally, I had to get off my phone. I had to stop trading on MT4 and MT5 personally, because to me, it was way too easy for me to enter into trades, right? Like I was entering trades while I was driving, while I was at the gym, while I was hooping, and it's like, yeah, and maybe one day I'm gonna be on that level, but I know right now I'm not on that level psychologically to know, to be entering in and doing all that stuff while I'm on the go, so I had to switch to trading futures on my computer on TradingView because it's like, it just makes me feel more professional. And now it's like, okay, if I win a trade, and I like what my return was, then I'm good for the day and I can shut my computer down and go on about my business, knowing that my account is intact. Like today, I got a really, really good trade. And, it put my account up, in the spot where I liked it. And I saw other setups, but I was like, you know what, I'm not even gonna do it, because I just didn't even feel that urge. Whereas if I was on my phone, I felt like I would have a quicker urge to click and enter and stuff like that. So that's just like my little piece on psychology.
Yes, sir.
Appreciate you, brother.
It's fire. Any questions, anybody? Or y'all good? Any inputs?
Anybody got any psychology, like anything, like how y'all doing on your just on your own personal psychology? Don't feel nervous, bro. Like, I mean, it's just, we just all up in here just chilling.
Nah, Vine be in the back of my head, like it's either stop loss or TP.
Yes,
I ain't gonna lie.
Yeah.
got to, bro.
That's-
Gotta have it. Gotta have it. Let me see the chat. Everything okay? Good. All right, man. All right, y'all.
All right, I'm gonna stop the recording. I'll hand over.
Oh yeah, right.
I'll hand over host. That way you can record your segment.